Let's talk Heloc loans. Are you open to get one of those but have bad credit? Well, I've got some good news for you. It's not the end. In this video, I'm going to explain to you how Helocs work, how your credit score factors in, and how you can improve your chances of getting approved even with not so great credit. Trust me, this is not the video to miss, so hang in there as we dive in. Welcome back to the channel. I'm Andy from Credit Sage, and we've got the answers to all your hardest credit questions. With over 3,000 reviews and a Trustpilot rating of 4.9 out of 5, you can bet we'll ace them all. Today, I'm going to cover all the bases on Heloc loans. You'll get all the great tips you need to navigate securing one. So, let's start simple. What's a Heloc anyway? A Heloc, or Home Equity Line of Credit, is a type of loan that allows homeowners to borrow money against the equity they have built up in their homes. Now, unlike traditional loans, a Heloc operates like a credit card, in that the borrower is given a line of credit that they can draw from as needed, up to a predetermined limit. The borrower can then repay the borrowed amount over time, typically with an adjustable interest rate. Now, it's different from a home equity loan where you take out a lump sum loan against the equity in your home. With a home equity loan, you receive the entire amount of the loan up front and then repay the loan with a fixed interest rate over the set period of time. Imagine that you're a homeowner who has built up a considerable amount of equity in your home. So let's say you have a mortgage balance of $200,000, but your home is worth $300,000, which means you have $100,000 in equity. You are considering taking out a loan to pay for a home renovation project, and you are interested in using your home equity to do so. Now, one option is a Heloc. With a Heloc, you would be able to draw funds as needed up to a predetermined limit for the duration of the loan term, which could be 10 or 20 years even. So let's just say you qualify for a Heloc with a limit of $50,000. You could draw $10,000 for your home renovation project and then repay that amount over time with an adjustable interest rate. The interest rate on your Heloc may vary based on market conditions and other factors, so you'll need to be aware of that when deciding whether to take out this type of loan. Now, the focus of this video is whether or not you can get a Heloc with bad credit. And the answer is yes, but I'll explain how in a minute. First, I want to look at why credit matters for Helocs. Now, like with other loans, credit matters for Helocs because lenders use it to evaluate the borrower's credit worthiness and assess the risk of lending them money. Now, lenders consider a borrower's credit score, credit history, and other factors, and a high credit score generally indicates that the borrower is less risky and more likely to repay the loan on time and in full. On the other hand, if you have a lower credit score, that can make it more difficult to get approved, or you may have to deal with higher interest rates, which can increase the cost of borrowing. Now, some other factors lenders consider when evaluating a Heloc application include monthly income, credit score, equity in the property, and debt-to-income ratio. So it's important to have a stable monthly income for 1 to 2 years before applying, as this shows the lender that you, the borrower, has a reliable source of income to repay the loan. Now, most lenders require a minimum credit score of 620 for a Heloc application to be considered. The amount of equity in the property is another important factor, with at least 15% to 20% equity being ideal. Now, finally, a good debt-to-income ratio is essential, as it shows how much the borrower owes compared to how much money they make. Now, many lenders prefer a debt-to-income ratio that doesn't exceed 35 or 45%, as this indicates that the borrower can afford to make monthly payments on the loan. If you already have bad credit though, here are a few easy steps that you can start doing today to get your credit back on track. Start by requesting a free copy of your credit report from each of the 3 major credit bureaus. That's Equifax, Experian, and TransUnion. Review the report carefully and identify any errors or inaccuracies that may be dragging down your score. dispute any errors with the credit bureaus, and work to improve your credit score over time by making timely payments on your debts, keeping your credit utilization low, and avoiding any new applications. Here's a hack though to help you with that. Just contact Credit Sage. At Credit Sage, we believe that taking control of your credit situation shouldn't be a hassle. That's why we offer an easy solution to help you improve your credit score. Think of it this way. Instead of spending hours trying to figure out the ins and outs of credit, let our experts handle it for you. We are well versed on identifying potential issues and developing effective solutions to tackle each one. If you're ready to take the first step towards improving your credit, simply reach out to us. I'll leave a number in the description below so you can focus on other important things, or even just kick back and relax. When looking for lenders that specialize in HELOCs for borrowers with bad credit, it's vital to do your research and compare multiple lenders. Look for lenders that are reputable and have a history of working with borrowers in similar situations to you. You can also consider working with a mortgage broker who can help you find the best options based on your specific needs and financial situations. Another option is having a cosigner with good credit because this can significantly improve your chances of getting approved for a HELOC. A cosigner is someone who agrees to take responsibility for the loan if you are unable to make the payments. Now, this can reassure lenders that the loan will be repaid even if you have a poor credit history. Also, increasing the amount of equity in your property can also improve your chances of getting approved for a HELOC. This can be achieved by making extra payments on your mortgage or making home improvements that increase your home's value. And by doing this, building up your equity shows the lenders that you are invested in your property and are less likely to default on the loan. And also keep in mind that lenders may charge higher interest rates or fees for HELOCs for borrowers with bad credit. And this is because bad credit borrowers are considered higher risk, and lenders may need to charge more to offset the risk. So make sure you understand the terms of the loan and that you can afford to make the monthly payments before taking out a HELOC. And also, even if you're able to get a HELOC with bad credit, it's really important to continue working on improving your credit score over time. And this can help you qualify for better loan terms and more affordable financing options in the future. So I want to share with you a few tips to help you work on your credit. First and foremost, pay your bills on time. Late payments can significantly impact your credit score, so it's important to pay your bills on time every month. And one way to do that is consider setting up automatic payments or reminders to help you stay on track. Also, your credit utilization is the amount of credit you're using compared to your credit limit. So aim to keep your credit utilization below 30% to maintain a good credit score. Monitor your report. Like I said before, check your credit report regularly to make sure that there are no errors or inaccuracies that may be hurting your score. This is very important. And then if you find any, dispute any errors with the credit bureaus and work to improve your score over time. This one's a little tough, but avoid opening any new accounts. Applying for multiple credit cards within a short period of time can negatively impact your credit score, so be selective and only apply for credit when necessary. Keep old accounts open. Closing old credit accounts can lower your credit score as it reduces the length of your credit history. So keep old accounts open and maybe just use them occasionally to maintain a positive credit history. By implementing these tips and being consistent in your efforts, you can improve your credit score over time and achieve your financial goals. But again, if you're feeling overwhelmed by all of this, that's okay. Credit management can be tough and very stressful and taxing, but you don't have to do it alone. Just circle back to option one. With a quick phone call to our team of experts, we can take the burden of credit management off of your shoulders. We'll work with you to create a specialized plan to improve your credit and achieve your financial goals. So let Credit Sage be your guide to better credit today. If you found this video helpful, please show your support by hitting the like and subscribe button to our channel for new videos each week. Thanks for watching.